Hello Andy, welcome back to the channel. Today, we're diving deep into some significant news coming out of the Central Bank of Iraq, or CBI. Over the past few weeks, we've seen a series of policy announcements that are painting a very interesting picture of Iraq's future monetary strategy. So, what's really going on with the Iraqi dinar? Let's break it down. First, let's look at the key developments. On September 30, 2025, the CBI governor, Eli Masenal Alak, stated that Iraq has comfortable foreign currency reserves. He emphasized that the bank's policies have created a stable environment, allowing them to effectively defend the dinar's exchange rate. This is a strong signal of confidence from the top. Then, things got even more interesting. On October 15, the CBI announced it had increased its gold reserves to an impressive 170 tons. In the same breath, they signaled an intention to remove zeros from the currency. Now, before anyone gets too excited, they were very clear. This does not mean they are changing the official exchange rate at this time. It's a technical adjustment, not a revaluation. On that same day, the CBI published a paper titled Stability of the Iraqi Dinar Exchange Rate, reinforcing the plan to maintain the current exchange rate for now while preparing for longer-term adjustments. A few days later, on October 18, the CBI rolled out new regulations to combat currency smuggling and money laundering. This means businesses making overseas purchases now need to provide detailed receipts for any money transfers abroad. These pieces, when put together, show a clear strategy. The CBI is tightening its grip, boosting its credibility, and setting the stage for a more resilient Iraqi currency. So, what does this new currency policy actually mean? It's about more than just the exchange rate. It's about how the CBI manages reserves, how it regulates banks and foreign transactions, and how it's preparing for structural reforms like removing the zeros. The first major point is stability. With solid reserves and low inflation, the CBI's primary goal right now is to keep the dinar stable under its managed rate system. Don't expect it to float freely anytime soon. Second is the plan for structural reform. Removing zeros from the currency is a big step aimed at simplifying the monetary system and reducing the burden of carrying large amounts of cash. But again, the CBI's message is one of caution. Reform will happen, but without disrupting the stability they've worked to create. Third, we see strengthened financial controls. The new regulations on currency transfers are crucial. By cracking down on illegal currency outflows, the CBI is protecting the effectiveness of its own policies. You can have a stable currency if money is flowing out of the country unchecked. And fourth, the increase in gold reserves isn't just for show. It's about building a credible foundation. Strong reserves give the central bank the power and the confidence to defend the currency and support the entire financial system. This matters for everyone, from Iraqi citizens to international investors. For the domestic economy, a stable currency and a credible central bank can boost confidence and reduce inflation risks. For the Iraqi diaspora sending money home, it means less risk of sudden, negative shifts in the exchange rate in the near future. Now, for the speculators and the currency investors who are hoping for a massive, overnight revaluation of the dinar, the signals from the CBI suggest you should temper your expectations. The focus is on gradual, cautious reform, not a speculative windfall. Of course, there are risks involved. Removing zeros from banknotes doesn't magically increase the currency's value, and some might misinterpret this. Any major reform can also face political resistance or delays. And let's not forget, Iraq's economy is still heavily dependent on oil. A sharp drop in oil prices could put serious pressure on the currency, regardless of these reforms. So, what should we watch for going forward? We'll be keeping an eye on any formal announcements about changing the exchange rate regime, the actual implementation of the zero removal plan, and the updates on foreign exchange reserves. We'll also monitor progress on banking sector reforms and of course, oil revenues. In summary, the Central Bank of Iraq is in a transition phase. It's strengthening its reserves, tightening regulations, and preparing for technical reforms. The immediate priority is stability, not a dramatic revaluation. For anyone involved with the Iraqi dinar, the takeaway is that a foundation for long-term resilience is being built, but immediate, large gains are unlikely. Thanks for tuning in. If you found this breakdown helpful, please hit that like button, subscribe to the channel, and ring the bell so you don't miss our future updates. We'll see you in the next video.